Alrighty guys, I'm going to show you an alternative way of calculating dividends paid later. Which is now actually dividends paid. This is where I said please don't get confused. There's a difference between dividends paid and dividends on ordinary shares. Guys, certain things that I say, please write them down if you know they're going to confuse you. Write them down. Write somewhere in your book that there's a difference between, just like I'm explaining it to you right now. There's a difference between dividends paid and dividends on ordinary shares. Dividends on ordinary shares. It's under theory that we did earlier on when we started with this online thing. Well, 2 weeks after we started, I think, where I was asking you guys questions on WhatsApp. Dividends on ordinary shares, it's simply this year's interim dividends plus this year's final. And normally that information normally find it in retained income. But final dividends, they will always be given to you in trade and other payables as shareholders for dividends. This year's final will be this year's shareholders for dividends balance in trade and other payables, or simply under current liabilities on the face of your statement of financial position. I hope that makes sense. Okay. And then dividends paid, guys. Dividend paid, it's either you use the formula that I just gave you right now, or you use, I don't know if I wrote it, or you use this formula. It is last year's dividends, which is shareholders for dividends balance from last year, the ones that you owed last year, plus this year's interim. Do you see the difference between the two? Please write that difference. I don't want you to confuse the two. Dividends on ordinary shares goes to retained income. Dividends paid come to cash flow statement. You bring them to the cash flow statement, and they're two different things. And for dividends paid, it's either you use the above formula or you use the second formula. Now, for the second formula, guys, your dividends paid, you will simply take last year's dividend, which was 412,500. You minus it because you're gonna pay it, and you paid this year's interim. Interim dividends, guys, are declared and paid, so they'll always be paid. Okay, the only thing that we don't pay, it's simply your final dividends for the current year. They will only be paid when? Next year. Hope that makes sense. Okay, so if you take 412,500 minus 173,250, it'll still give you that 585,750. I hope that makes sense. I know I sound like a pastor trying to emphasize things. Okay, for taxation paid, guys, you need to check. We did this, so I won't go back and explain it again. For taxation paid, you only look at, let me just go because someone might get confused. Okay, you're gonna go check your trade and other receivables. In this case, we were not given trade and other receivables, so you go straight to the face of your balance sheet. There it is. For last year, sales income tax was 26,100, and it was in trade and other receivables, basically under current assets. Current assets, that's why these definitions are emphasized them at the beginning of the year. These are the things that you own, they are yours. That 26,600 is a current asset, you own it, and it's supposed to be paid to you. It's yours. The only thing that remains here is that it needs to be paid to you. SARS needs to pay you that amount, and they will pay it in 2017. That is why it's a plus on the face of your cash flow statement. It's plus under taxation paid because it has to be paid to you. It is a cash inflow. That makes sense. And then that amount under this amount here, income tax, that 494,813, you will subtract it because we assume that this year's tax has been paid. Okay. When you look at current liabilities, you realize that we have sales income tax for this year, which is 53,550. We did not pay that this year. That is why it's under current liabilities. Current liabilities, things we owe. We are supposed to pay them, but we will only pay it next year. So we're going to add it. Okay. I'm going to jump back to the solution. So in this case, taxation paid, you have 26,100. You're going to subtract the amount that comes from the income statement, which is 494,830, and then you're going to add that 53,550, and then it'll give you your taxation paid, which is 415,180. Almost all of you guys that submitted got it right. Okay. You basically all got them right. And you're gonna add all of these amounts, so you know that if it's in brackets it's minus when you put it into your calculator. So you're gonna take 1,746,610 minus 63,000 minus 585,750 minus 415,180. Whatever you get as the amount, I know they said don't calculate, but I'm gonna put it under that shaded column, which is minus 682,680. You are going to put it there. Actually, it's not minus, it's plus. Sorry for that. Please don't get confused. It's a plus, then inflow. That means your inflows were more than your outflows. So cash flows from operating activities will be positive 682,680. I will send your today's classwork probably later today or tomorrow morning. I don't want to promise later today because I normally work in the morning. I wake up at 5 and do all these things. Sometimes I have to change the videos and so on, like I did today. Yeah, I'm just gonna teach you guys using past papers to make your life easier, so that when you revise, life becomes a breeze. Okay. That's it from me for today. Good morning, good afternoon, and good evening.